Hi, I'm just going to do a very quick video on tax on imported services, especially on the thing about reverse charge regime, because I have requests from a lot of students telling me that they have difficulty in understanding what this is all about. So I thought of making this video for the benefit of most people here. Right, so it's going to be a quick one. So as you know that from 1st of January 2020, there is actually tax on important services in Singapore. So before that, if you were to procure any digital services from overseas supplier, there will not be any GST. But from 1st of January 2020, there will be GST imposed on some of the digital services that we bought from overseas supplier. So these are things like, for example, mobile apps or ebooks, or whenever we download software from overseas merchants, or even subscribe to online news, online courses, all these that might be GST from 1st of January 2020 onwards. And how is GST being collected on such imported services? So in Singapore, we use reverse charge regime, as well as OVR, which stands for Overseas Vendor Registration. All right. So first thing first, when do you apply which method? So reverse charge regime is for business to business transaction, right? Whereas overseas vendor registration is for business to customer, or rather, business to consumer transaction. So B2B is for reverse charge and B2C is for OVR. So now just want to make things clear, B2B, right? When we say B2, this B here, this B actually refer to any GST registered businesses in Singapore that include not just the company but also SP businesses as well as partnerships. But if the overseas supplier were to supply digital services to non-registered GST businesses in Singapore, they will go under B2C, right? Okay, so this is something that you want to make yourself clear. All right, now, so before I talk about what is OVR and when do you have to apply reverse charge, now let me tell you more about this reverse charge, because a lot of people, they get confused about what really is reverse charge, all right? So I hope to take this opportunity to clear your doubts and make it easier for you to understand what really is all about. So like what I mentioned to you, RC regime is actually transaction between B2B, right? If an overseas supplier of the digital service were to supply the digital services to a local GST registered GST business in Singapore, they will need to go by this reverse charge. Okay, so what it means by this, so let's say I've got a overseas digital supplier, and these are the people who usually are located overseas, right? And I've got a local GST business, all right, GST registered business. Okay, so they want to buy some digital software, all right? So like this. Okay, now so let's say the value of the services is $1,000. Right, so for this case, because this is B2B, so in this case you will have to apply reverse charge. So what happens is this: when they when this local GST business pay the money to the overseas supplier, at the same time they will need to charge themselves GST. All right, so this GST will still be at the rate of 7%. So let's say the value of the supply is $1,000 plus GST 7%. So they will need to take out additional $70, and this $70 will be given to IRAS. Okay, so now, so usually what happens is this: when you buy something from a GST registered supplier, the GST registered supplier should charge the buyer GST. But now the seller don't charge, all right? It is the opposite. the buyer will charge themselves. Okay, that is why it's called reverse charge, right? Reverse charge. And this $70 will be collected on behalf of this overseas digital supplier and give it to IRAS. But if conditions are fulfilled, this local GST business will be able to claim back the input tax of $70 in the event if all the conditions are met. Okay, so this is how it works. So so just remember, okay, instead of the overseas digital supplier charge the local GST business GST, the local GST business have to charge themselves. That is why it's called reverse charge. Okay, so now coming back to this part here, now who will need to go under reverse charge regime? So it depends on whether you are already a GST registered business or whether you're not yet GST registered business. So because with effect from 1st of January 2020, okay, even if you are not GST registered now, but because you are already spending money to buy digital product or digital services from overseas, you might be liable to be registered for GST. So please take note. So who are those people who need to apply reverse charge method in order to collect GST whenever they procure digital services from overseas? So we have GST registered business who are partially exempt, that are not fully entitled to claim the input tax credit. So when you see this words like partially exempt, what does it mean? Okay, it means that perhaps they are making both taxable and also they make exempt supply, and that is why they are not able to, claim full input tax credit, right, on purchases that they buy from the supplier. Okay, or they are GST registered charity and voluntary welfare organization. So these people will need to, from 1st of January 2020, account for GST when they buy digital services from overseas. Okay, so what about this group of non-GST registered business? So previously they are not registered for GST, but because of meeting certain conditions, they will be liable to register for GST already after 1st of January 2020. So who are those people? Those businesses who are not yet registered, but if they have been buying digital services from overseas for the last 12 months and the value exceed Singapore dollar $1 million, right? And even if they are not entitled to fully claim the input tax, they will be liable to be registered for GST for this purpose and apply the reverse charge regime. Okay, but of course, in the event if they want to claim back GST on those digital goods that they buy from overseas, they will be allowed to do so if all the conditions are met. Okay, so remember, okay, this reverse charge, right? It's between B2B, right? Business to business. Now, what about B2C? Okay, like what I have already mentioned to you before. Now, B2C is for overseas supplier who are supplying the imported services. They're selling the imported services directly to people in Singapore or businesses in Singapore who are not GST registered. So it will go under B2C. So under B2C, the overseas vendor or the digital services supplier will need to register for GST. All right. So how do the overseas supplier business know that they need to be liable to register for GST? Right. So it says here, so those are the businesses that belong outside Singapore. They will be required to register for GST, right? If their annual global turnover exceed $1 million. Okay, so this is Sing dollar, of course, and at the same time they actually make B2C supply of digital services to customers in Singapore, and it is more than 100,000. All right, so if they fulfill these two criteria, the foreign businesses who have been supplying imported services to the people, to the business in Singapore, they will need to start to register for to be GST registered for this purpose. Okay, now what happened? Okay, I've got a lot of questions asking me what happened if I'm a GST registered business and I want to buy some digital product from an overseas supplier who is already GST registered. Okay, so I'm a GST registered business here. So what do I do if I want to buy from an overseas supplier who is already GST registered? Do I apply the reverse charge regime? Okay, or do I apply this? Okay, whereby if the overseas vendor registration scheme, whereby if the overseas vendor were to sell things over to the consumer in Singapore, they have to charge GST. So which one do we apply? So remember, okay, if you are already GST registered business in Singapore, what you will need to do is if you were to buy imported services from a supplier overseas who is also a GST registered business in Singapore, what they will need to do is they have to inform this overseas vendor that they are already GST registered, okay, so that the overseas vendor will not charge them GST anymore. All right, if that is the case, the registered business will need to apply the reverse charge instead. So they will charge GST on their own when they buy things over from the overseas vendor, and then they will collect on the overseas vendor behalf and give the GST back to IRAS. Okay, so in other words, they will still have to apply the RC method. Okay, in the event if it's buying from a GST registered business overseas. So hopefully this video will help you understand what is the difference between the reverse charge regime and the overseas vendor registration regime. Thank you. Bye-bye.